And if you don't want to lose, then just invest in the S&P 500 forever. Invest in your 401k. You'll make 4 to 8% year after year forever. And at 65, you can withdraw a couple $100,000 and live off of that. And then that'll be gone in like a few years based on your spending habits. And then you're back to nothing. So retirement is really a fallacy because like none of the retirement plans actually get you there. And all of the risky stuff does. Right. So if I look at like my partner, Mehul Patel, right, ex Goldman Sachs, has taught me everything that I need to know about futures and literally is responsible for our students getting $700,000 in profits and payouts from prop firms. Now, for people that don't know what prop firms are, they're companies that give the best traders in the world money, right? So imagine having $4.5 million like Mehul that you can literally trade with and take big risks with. And if you win, you keep 80% of the profits. And if you lose, guess what? You don't owe anybody a dime. Now, if you think that sounds too good to be true, then go on ChatGPT or Google, wherever you like to do your research, and look up how the prop firm industry works. And the best part about futures prop firms is that it's regulated by the CME, the Chicago Market Exchange. For people that don't know what that is, it's the equivalent of Wall Street, but for futures. So all the data you're getting, all the firms that we work with that give us this money, it's regulated. They can't just like rob you, right? Whereas like in Forex, unregulated industries, there are prop firms that give traders money, but they can literally disappear with the money. And I've heard these stories over and over again. It's because they're not regulated. So nobody cares when that happens. In futures, that literally can't happen. And the way you win the game big, like you just described, leverage is power.
Yeah, it's just, you have to be real careful with what you're doing and how you do it. And obviously you hire somebody like yourself and your group to do something like that. I think really two things really hold people back is either they listen to a guru about investing or they just like they're like, oh, it's a bull run. It'll last forever. I mean, I've heard and seen like so much and so many different things, or they missed out. Right? Like they're like, oh, well, I didn't invest in that particular chip maker. I missed out. So I'm going to just throw shade on the whole thing. It's awful. And I hope it all cracks. And it's just like, well, like, good luck. Like, I'm going to ride this thing out and just deposit all the money into my account. Thanks. Sure. Right? You know, like, so what is it like you've heard that it's just awful, bad information, things that people like shouldn't listen to outside of, you know, obviously, you know, putting all your money into your 401k and just like riding that out until oblivion, or, you know, just don't bet on things that you don't understand, stuff like that. Yeah, like I've heard all that stuff. Like what have you really heard that like can change somebody's perception of either stocks, options, futures, whatever it is? Yeah.
What you just described reminds me of the levels to people's sophistication when it comes to investing. The lowest level is 401k and S&P. That's not going to take you anywhere. You just know that. We all know that. Mm-hmm. There's the second level, which is, and this is actually most people that get on a call with me. They say, "Oh, I'm investing right now. I am trading, but I'm trading stocks." And I clarify what they mean because sometimes they use their own terminology that isn't accurate. I'm like, "Do you mean you're buying low and selling high, just shares?" They're like, "Yeah," and I try to get 5% a day or like some movement in the market. And I'm like, okay, that's a very unsophisticated way to trade, in my opinion.